What's up, everybody? So today's first lesson is going to be about terminology and slang words and basically vocabulary. Before we get down to learning how to trade and how to read charts and volumes in level 2, you guys need to get down your terminology so you know what I'm talking about and also what other traders are talking about on message boards and chat rooms and all that other good stuff. So let's get started. Feel free to pause this video and take notes, write these down, study them if you don't know them already. Buy and sell, it's basically simple. It's to buy a stock or to sell a stock. Limit order is meaning you want to buy or sell a stock at a certain price. Market order, you buy or sell wherever the market best fits you. Usually market orders fill really quick. We're not going to be using any market orders, but you still need to know this. Breakout is when a stock breaks its resistance level and there's no more resistance levels based on chart and technical analysis, also known as blue sky breakouts, and the stock just keeps rising. Momentum is when a stock accelerates fairly quickly and it just keeps going up and up and up. Usually the case of thin stocks trading. Momentum stocks don't last they don't last long. Can be hours, minutes. Momentum can be also very profitable and also very dangerous, depending how you trade it. Scalping, to make small gains within one day, a couple minutes, hours, whatever your technique is. Basically, within a day is called scalping. Bid stacking is when multiple market makers come up on the bid with large bids or large buys. It doesn't always have to be large buys, as long as there's multiple market makers coming up to buy, showing demand. That's called bid stacking. Ask stacking, same thing. When multiple market makers come up to sell on the ask, whether they're large or small blocks, as long as there's a lot of them, that's known as ask stacking. Dip is when a stock touches its resistance level, isn't able to break it, and then retreats back down to lower prices, so it's dipping back down. Most of these words are common sense, to be honest. A bounce is when a stock is taking a dip and then it bottoms out and it's increasing back up rapidly in price. Diluter is when market makers dilute, so they sell more shares than they're claiming. So some of the market maker diluters are down here: VFIN, VFIN, VNDM, and BMAC. These are the most popular in penny stocks, and we'll get into that a little bit more when we're going to be learning about level 2s. They're very critical to watch out for. A lot of diluting stocks tend to not do so well. Market makers are basically institutions or firms that have their own market maker. Most common ones is ETRF, which is E-Trade, ATDF, which is TD Ameritrade, and so feel free to pause that if you need to write that down. Candlesticks is a type of chart we're going to be using. About 90% of traders use this chart, if not all of them. It's really reliable and it's really easy to work with. Intraday is what happens inside each day of a stock. Volume, amount of shares being traded, bought, or sold. And that's it for today. So why don't you get these words down and we will continue with our next lesson on charts.